Hi, I'm Wal Galbraith. I'm a part of the Ray White South Coast Group, and this is your South Coast Snapshot for week 14, 2023. Now, the snapshot is designed to give you a bite-sized breakdown of the real estate market overall, including local, regional and city-based information across Australia. All information is sourced from the AFR, leading economists on Twitter and the Sydney Morning Herald. All information is relevant to buyers, property owners or both. 2 in 5 young adults expect that they will receive family help to buy their first home, a University of Sydney study shows. It comes as a separate figures from Domain show that the average first home buyer couple would need to put half of their income towards mortgage repayments on an entry-level Sydney home, up from less than a third of income 2 years ago. Rising interest rates have sent mortgage costs soaring while only slightly reducing the deposit required to buy a home in the city's pricey property market. The study of 25 to 34-year-olds in Sydney and Perth asked more than 850 respondents about their housing aspirations and found 40% expected family assistance. It was conducted by the Australian Housing and Urban Research Institute. Meanwhile, a young Sydney couple on the average income would need to put 50.9% of their earnings towards initial mortgage repayments if they purchased at Sydney's entry-level house price of $851,500. Modelling from the 2023 Domain First Home Buyer Report shows. That's up from 31.5% of income in 2021. Unit buyers would see 34.2% of income chewed up by repayments on a $571,500 entry-level apartment, up from 25.5% in 2021. An estimated 275,000 landlords could find it tough to refinance their fixed-rate mortgages, with those who own multiple properties under pressure, as lenders impose strict borrowing criteria, including a minimum rental return. For investors rolling off fixed rate this year, the rapid rise in interest rates has severely cut their borrowing capacity, while falling prices threaten to tip them into negative equity, experts say. This may force some investors to sell some of their properties if they are unable to switch to a cheaper loan. Those who own multiple properties in particular face stricter lending assessments as some banks tighten their criteria on riskier loans, including meeting a minimum rental yield. The minimum rental yield requirement varied, but lenders typically required about 5.5%, Ms. Porter stated. Rate City estimates that nearly 1 in 3, or about 275,000 of the 880,000 fixed-rate mortgagees expiring this year are investor loans, based on the proportion of investor lending from April 2020 to December 2021, as recorded by the Australian Prudential Regulation Authority. The time it takes for a couple to save a 20% deposit to buy an entry-level house has shrunk by 8 months nationwide since interest rates started rising last May, as falling prices reduced the amount they need to stash away, and improving wages and high interest rates on savings bolster their finances, a new report from Domain shows. But the portion of income needed to service their mortgage has blown out to 41%, a new record sparked by the 10 consecutive interest rate rises. Meanwhile, a separate study from the Australian Housing and Urban Research Institute found that it was virtually impossible for any 25 to 34-year-olds to save up enough deposit on their own amid higher property pricing and the surging costs of living. The time it takes for a first home buyer couple in Brisbane and Canberra has been cut by 14 months each and shortened by 11 months for Melbourne and Darwin buyers. The rest of the capital cities posted a smaller improvement of between 1 month and 5 months due to the stronger performance of their housing markets. The share of loss-making home sales across Sydney and Melbourne surged during the December quarter to levels not yet seen in 4 years, as the rapid drop in prices took their toll, CoreLogic's Pain and Gain report shows. But the recent stabilisation in home values could help slow down the rate of unprofitable resales in the coming months, said Eliza Owen, CoreLogic Head of Research. I think Sydney has seen the worst, and we're getting near to the peak of the loss-making sales, or at least the rate of increase. in line with more positive capital growth trends of the start of 2023, Ms. Owen stated. It is possible to see a rise in profit-making sales in the next quarter, but it may be a bit early to see a material uplift. In Sydney, loss-making sales rose by a 1 percentage point increase to 8.8%, the highest level since July 2019. Losses were heavily skewed towards the unit sector, where 14.8% of resales were unprofitable. Nationwide, the share of unprofitable resales rose by 0.3 of a percentage point to 6.9% compared to the previous 3 months, lifting the average loss to $40,500. Perth posted the highest volume of loss-making resales, accounting for almost 20% of all loss-making sales nationally. Nearly 6 out of 10 sales in Perth City made a loss, which is a sharp rise from the 53.4% recorded in the previous quarter. Investors bore the brunt of the weaker market, with the portion of loss-making investment sales rising to 11.2%, up from 10.2% in the previous quarter. This contrasts sharply with owner-occupier loss-making sales, which rose by just 0.1 percentage point to 3.6%. 1 in 10 unprofitable sales nationally were properties bought during the pandemic, with the Gold Coast, Brisbane and Sunshine Coast recording the highest rates. The gap in profitability between houses and units blew out to a new record of 10.35 percentage points. Houses delivered $350,000 profits on average, which is more than twice the $145,000 gain achieved by units. An acute shortage of properties is driving rents sharply higher across Australia, prompting an intense competition amongst tenants, as experts warn the crisis will not be solved without a concerted effort to build more homes. People living in inner Melbourne, Ku-ring-gai on Sydney's leafy upper North Shore and Caboolture north of Brisbane are experiencing some of the largest price rises nationally, with rents increasing as fast as 36% in some areas, according to online real estate listing data compiled by PropTrack for the AFR weekend. With the share of homes that are vacant sitting at just 1.5%, advertised rents are increasing at 8.7%, and tenant advocates say prospective renters are increasingly resorting to last-ditch tactics like rental bidding and hiring agents to secure a place to live. Looking to make the best use of the current marketplace or considering your financial options? If you're either expanding your property portfolio, refinancing or looking to sell your current property, get in touch today, we'd love to help. I'm Wal Galbraith with the Ray White South Coast Group, and that was your South Coast Snapshot for week 14, 2023. See you next week. Be well.